Good afternoon, grade 9s. My name is Mrs. Olivier, and today I'm going to present with you the revision on the general ledger for grade 9. Before we start, we have to look at a few things that we must remember. Number one, you must remember that the general ledger has two sections called the balance sheet account section that consists about your assets, your owner's equity, and your liabilities, and then your nominal account section. If you look at our balance sheet account section, our owner's equity refers to capital and drawings. Fixed assets refer to land and buildings, vehicles and equipment. Current assets to bank cash flow and petty cash, and liabilities to our bank overdraft. If we look at our nominal account section, then we look at our incomes. For you, it will be sales and cost of sales, then current income, rent income, commission income, etc. And for your expenses, you will have cost of sales, consumables, salaries and wages, advertisements, and so on. Then you must also remember that the general ledger has two sides, the debit side and the credit side. And if you remember correctly, your debit side have a month, a day, your details, your folio number, and your amount. And your credit side is a carbon copy of your debit side, and it also has a year, month, day, details, folio, and amount. So if we look at the basic rules that you must remember that assets always increase on the debit side and decrease on the credit side. Your owner's equity will increase on the credit side and decrease on the debit side, and your liabilities will increase on the credit side and decrease on the debit side. So if you can think about this, if we of the knowledge that you know now, then if you look at your receipts that's in your CRJ, then bank will be debited because it's an asset that increase and all the other accounts will be credited. But let's see if it's the same for the trading business. Now, if we look at our CRJ, first it's important our day. It becomes very important if we look at our sundry accounts. We have our folio number. Then we have our sundry accounts that you must remember that is posted separately as it happens because it is transactions that do not happen so much. So then the first thing that I would do if I post a CRJ is I would take the cost of sales and I will highlight it and I will write on top it for me trading stock. Because what is the cost of sales? The cost of sales tells me how much trading stock that I sell. Okay, so what is the rule? For now, we're going to ignore cost of sales. We're going to say bank is still the most important column. So this bank account is my most important column. So sales, and therefore bank equals sales plus my sundry accounts. So the rule will be bank is debited. Why? Because bank is an asset that increases and the rest, except for cost of sales, will be credited. So if we look at our general ledger, bank will be debited and all the other accounts that is capital on the first because it's a sundry account, sales March the 31st because it's a column, rent income March the 14th, and interest income the 31st because that was the date that it happened, and then also your folio number. Bank is debited, all the other accounts is credited. Now we're going to look at our cost of sales. Still we look at the day. That is important. And the folio number. Again, now we look at cost of sales. You highlighted cost of sales, but you haven't posted it yet. What does cost of sales tell me again? Cost of sales tells me how much of the trading stock that I sell. So cost of sales is an expense that decreases our owner's equity. Therefore, it is debited. And then trading stock is credited. And why? We sold the trading stock. So the trading stock is decreasing, and trading stock is also an asset that then decreases. So if we look at the rule, cost of sales is debited, trading stock is credited, cost of sales is debited, March the 31st because it was a column, CRJ3, 24,000 Rand. Why do we write trading stock here? Because that is the account that we take to the credit side. And in that account, we're taking it to the credit side. 2023, March the 31st, Cost of sales, CRJ3 for 24,000 Rand. Right. Things to remember when we post the CPJ. The rules stay the same. Assets increase on the debit side and decrease on the credit side. Owner's equity increase on the credit side and decrease on the debit side. And liabilities decrease on the credit side and increase on the debit side. So with the information that we know, we can apply the following rule. Now bank is a payment, cash payment journal. So bank is decreasing. So bank is credited. So all the other accounts is debited. So what do we look at? We look at bank equals all the other columns. So if we say 22,000 plus 3,000 plus 156,250, it will give us 181,250 again. What do we know? We know that we must look at the date. We must look at the folio number. Now, bank is credited, so all the other accounts will be debited. Why? Bank is an asset that decreases, and all the others is either trading stock, like trading stock, that's an asset that increase, or expenses that increase decrease our owner's equity. So what do? We start with bank. Bank is on March the 31st, total payments now, because it's out of the CPJ 181,250 is credited, so all the other accounts is debited. We start with the columns, trading stock, March the 31st, bank CPJ 122,000, wages on the 31st, bank CPJ 3,000, and then we post the sundry accounts. Drawings on the 4th, the rest stays the same, bank CPJ with the amount. Land and building on the 5th, bank CPJ with the amount. Stationery 21st, bank CPJ with the amount, and the bank charges. Things to remember when we post a DJ, again, stays the same. Assets increase on the debit side, decrease on the credit side, and owner's equity and liabilities decrease on the credit side and increase on the debit side. So what do we know? We know that we have to post debtors control is an asset that will increase on the debit side and decrease on the credit side. Sales is an income that will increase on the credit side and decrease on the debit side. Why? Because it increases owner's equity. Then we have cost of sales, that is expense, and that also decreases owner's equity on the debit side and increases it on the credit side. And then we have trading stock, that is an asset that increase on the debit side and decrease on the credit side. So let's look at our DJ. What is important? We have two columns. Like we did in the debtors in the CRJ, I will take the cost of sales and I will highlight it. So now we're just going to concentrate on the sales. Then we have the cost of sales that we highlighted, I said. Again, we take the cost of sales and we write trading stock next to it. Because again, the cost of sales tells us how much trading stock did we sell to get that amount for for sales. So sales is an income. It will increase our owner's equity and therefore it's credited. But we can't write it in bank. Why not? Because it's a debtors journal, not a cash receipts journal. So the debtors journal implies that debtors control is used as an asset that increases and therefore it is debited. So how would it look? We start with sales because that's what we know. 2023, January the 31st, DJ1, 14,400. Why do we write here debtors control? Because we're taking it to that account on the debit side. 2023, January the 31st, sales DJ1, 14,400. Now again, we look at the cost of sales now that you marked and you wrote trading stock at. What do we know now? Cost of sales is expense, decrease your owner's equity, and therefore it's debited. Exactly the same as in the CRJ. Trading stock is an asset that decrease, and therefore it is credited. So again, we start with January the 31st, DJ1, 10,800. Here we write trading stock because we're taking it to the trading stock on the credit side. And in trading stock, we write cost of sales because it comes from cost of sales on the debit side. Things to remember for when we post the CJ, again the same, rules stay the same. Assets increase on the debit side and decrease on the credit side. Owner's equity and liabilities will increase on the credit side and decrease on the debit side. So what do we know? Creditors control is a liability. It will be credited because it increases my liabilities, and all the other accounts will therefore be debited. So if we look at our CRJ, Creditors control is credited and all the rest is debited. So if we look here, creditors control is debited and all the other accounts will be credited. Remember when we post the sundry accounts that the day becomes important and that the account becomes important because it's transactions that does not so happen so often. So if we post it 2022, 2020, June the 30th, we write total purchases now because it shows how much credit purchases we had. CRJ 15, it is credited and all the other accounts is debited. So we start with the columns. Trading stock, where does it come from? Creditors control now, not bank. The same for stationery and printing. And then we post the sundry accounts. Packing material was 2 accounts, 2 times the 9th and the 28th. So it's posted separately because it comes from the sundry accounts, creditors control, and equipment. So what do we know? Creditors control is credited and all the rest is debited. So if we look at the summary of the general ledger, it will say the following. The general ledger has 2 sections, balance account section and the nominal account section. General ledger also have 2 sides, the debit and the credit side. Now the debit side will always equal the credit side. That means we've completed the double entry method. So here is a summary for you. CRJ bank is debited, the rest is credited except for cost of sales. That's the expense that decreases your owner's equity and it will be debited in trading stock, then credited in trading stock. In CPJ, bank is an asset that decreases, so it's credited and the rest will be debited. DJ, sales is an income that increases your owner's equity, so it is debited. Debtors control is your asset that also increases and therefore will be debited. Sorry for the typing mistake here. Then cost of sales is an expense that decreases your owner's equity, so it's debited. So trading stock is an asset that decreases and that will be credited. And the CJ, your creditors control is a liability that increases and the rest will be debited. Just quickly, let's look at the balancing of the account. When you have information on the debit and the credit side, sometimes it's necessary to balance the account. So if we look there, the bank account has total receipts and total payments. So what do? We look at the side that is the biggest. In our case, the debit side was the biggest. Now what we do? We subtract the biggest one from the smallest one to see how much is left. 137,411 Rand that was left. And we write it there in balance carry down. What do we do next? We take that amount down to balance brought down. So always check the side that has the most, subtract the side that's the most, subtract the side that's the least from it, write in the difference and put it in your balances amounts. Okay, other important information. Please ask your teacher to complete the attendance register. Here's the link for your quiz as well as your QR code that I will be sharing with you in 5 seconds from now. Thank you for your time and I hope that you learned something today. Thank you.